is up 3%. So yesterday's 3, today's 3. Slowly it's inching up. Birla Soft, we mentioned, is up 3. Kansai is up 8. So that's IGL is up about 3% or so as well. Carborundum Universal, and Rima had highlighted the numbers earlier, 5% in that one. And so on and so forth. Greaves Cotton is up about 2.6%. KEI Industries is up 2. KEC had a pretty large move yesterday. KEC is up 3.5% as well. So many from the broader market which are actually looking pretty good on the back of strong volumes as well. Anything on the downside? I mean, the Adani Total, Adani Transmission, those stocks were lower under pressure yesterday. At least at start, Adani Transmission is down 5%. It's a top volume traded name as well. And at number 2 position is UPL. I was saying this earlier, UPL numbers, I mean, do leave a fair bit to be desired. Stocks down about 2%. Pidilite is neither here nor there. It's down 1%. That's it. Zomato was down 1%. There was news yesterday that, Invesco has cut their estimate of Swiggy's valuation for the second time this year. And Zomato, I don't know if that's the impact, but it's down about 1%, small one. Oracle Financial Services is the other one, which is coming up with a 6% cut. And it's
that's an interim dividend.
Interim.
Yeah.
Okay.
Adjusted, it's flat.
Okay. Apar Industries is down about 3%, and Adani Total Gas is another one, which is down about 1.5% as well. Aarti Industries, again, something we were talking about earlier. Numbers are not all that great, 1.6% lower. We have the management join us in just a bit from now. 40 points still on the Nifty. We are at 18,300 plus on the index. Our market master of the day is Krishna Kumar Karva, Managing Director at Emkay Global. Mr. Karva, great to have you with us here on the program. Thank you for your time. Is it banks once again which are doing bulk of the heavy lifting in terms of contributing to whatever earnings surprises on the positive side we are seeing? And what's your overall sense of how the earnings season has gone so far? I think about 40% of all companies have reported.
So yes, what as you rightly said, banks have given very good numbers. But the question is that are we looking at peak in terms of the bank's profitability, credit costs, etc. And going forward, or in the next few quarters, or maybe 2-3 quarters down the line, how do you expect the banks to perform? My question is that yes, numbers have been very good for banks, and banks have recovered from their lows in the last 30-45 days. But in terms of valuation multiples, will we see any expansion of further valuation multiples, or are these most of the banks now getting into a territory where they could be kind of earnings compounders? So that is the key question that one should be focusing on. Yes, results have been broadly. I have not seen too many earnings upgrades across the board. Most of the time, I mean, the numbers have been good, but are analysts upgrading their numbers? Except maybe in autos, we did see upgrades coming up, and maybe in cement also. But in banks, NBFCs, etc., broadly, I think the growth is all factored in.
By the way, a space that has come back with a bang is autos. As we speak, Tata Motors, Apollo Tyres, Bajaj Auto are all sitting at fresh 52-week highs. So don't lose sight of that. Tata Motors, in fact, is the biggest Nifty gainer this year. It's up 30% now. Mr. Karva, good morning and thanks for being with us. Always great talking to you. So this space, right, I mean, it's come back after a lull of, I think, 5-6 years. And it's not that demand has come back in a big way. I mean, Tata Motors is still facing a lot of challenges in its global business. Bajaj Auto is still seeing, some export hurdles. But the stocks are at 52-week highs. Do you think the stocks are pricing in a major structural recovery? And how are you feeling about this sector now?
Not talking specific names, but if you look at the two-wheeler space, I think we are in for a massive replacement cycle picking up. And if you look at the volume, I think we are still 20-25% below our peak volume, which was in FY19. So it looks like that the replacement cycle is picking up, and that should be the reason why you will see possibly all the two-wheelers delivering good numbers. So I think that is what markets are factoring in, and we are seeing an uptick in many of these two-wheeler names. As far as passenger vehicles are concerned, yes, I think the major is having a lot of product launches, and we have seen that whenever new product launches are there, the numbers tend to do well, and the stock prices also do well. So that's what we are seeing. I think as far as commercial vehicles are concerned, possibly this quarter may be the peak in terms of the numbers, and maybe there is a slowdown that we expect in commercial vehicles. So yes, it's a mixed bag in terms of various segments of the auto segment market.
Hi, good morning, Mr. Karwa. What about the new age companies? I recall a few months ago when we chatted, you were talking about them speaking now the language that the markets want to hear. Is the language, is the actions good enough? If rate hikes are behind us, then that helps some of these companies, right? Because of the discounting factor. Any of them are looking attractive enough to get in, or have you gotten into any of them?
So yes, I think some of the companies have delivered also on numbers, and market is also looking at them positively. So every business has to be looked at independently. So earlier we used to look at all platform companies with one stroke, but I think now, I think the understanding of the business models is maybe much better than what it was earlier. And I think we should look at every platform company independently and value them. And yes, I think even the managements of these companies now being listed for more than a year or 1.5 years. So they have also become much more transparent in terms of communications and what the public market requires. So there are opportunities, valuations have become attractive, and if you feel that there are some winners in the segments, then they should be invested in. A few of the companies have started attracting a lot of investor interest. So yes, not to ignore them carte blanche, but independently, I think they should be looked at.
Mr. Karwa, MK has a pretty wide canvas in terms of coverage for mid caps and in the broader markets, broader universe. Run us through what is, what do your analysts and team of analysts really like at this point? I mean, a few names would help. Top of the list.
Honestly speaking, Prashant, names we can't talk, but as I've always said that mid-cap and small-cap investing is all about bottoms up and not on a top-down basis. So there are quite a few companies across sectors where valuations are attractive and growth prospects also seem to be attractive. I think that's the way to go about it. But having said that, I think more than the small-cap, mid-cap, I think there are some segments which have been ignored by the market for some time, and where valuations have become attractive. So we believe that the whole insurance space has been in the doldrums for 3-4 years now, and valuations are attractive, and that's one segment that one should be looking to invest in from a 2-3 year perspective. And banks, again, there are some of the mid-sized banks where valuations are attractive and they could possibly deliver. So maybe they are in the mid-cap segment, but they should be also invested in. We are also positive on some of the cement companies where we believe that going forward in terms of input costs, etc., things are much better and valuations also seem to be good. So these are some of the segments that we continue to be positive upon. In fact, some of the IT companies, despite the headwinds that the sector is facing and as reflected in the commentaries from various large biggies, but some of the smaller companies individually seem to be doing well, and if one is willing to be patient, then they should be invested in. So as I said, small cap, mid cap is all bottoms up.
Okay, individual ideas, right? I mean, I just wanted to throw this at you. I don't know if you guys track it, but the city gas distribution companies have been doing pretty well. I think it's price hikes that companies like Mahanagar Gas have undertaken, because of which there is a straight positive impact on the operational performance for their margins have looked good. But how do you feel about this space?
Honestly speaking, yes, we do have coverage, but do have an understanding? No. So I would prefer not to answer these questions.
Okay, we'll leave it at that then. Thank you. Thanks a lot for joining in. Appreciate your thoughts and appreciate the, your candid views on sectors as well. Well, for the market, it is, it's not bad. You'd have to say that after the kind of moves that we saw yesterday, the market is trying its best to build on to its gains for sure. The Nifty is now up almost about 36 odd points, and you have a lot of stocks that are pumping ahead, you'd have to say. Mahanagar Gas is at a fresh high, 7% higher on Mahanagar Gas post its numbers. Kansai Nerolac, in fact, I think Mahanagar Gas is now at an 18-month high. So just keep an eye out on that. It's almost a 30% gain that Mahanagar Gas has seen in 2023. Kansai Nerolac is the other one which is looking very strong this morning. And a couple of other names, you know, auto stocks are doing really well. So you have all your auto names, Tata Motors, Apollo Tyres. Apollo Tyres comes out with numbers today. It's at a 52-week high. It's looking pretty strong over there.
Well, that's right, Sonia. And in fact, you know, the stock that's actually pulling back from the Nifty a goodish bit is UPL. And volumes as well are very, very high on that one. So I think we should get that one up for you on the screen. First Source, I'm not sure what's going on there, but that stock's up close to around 5% as we speak. And Manappuram is trying to make a bit of a comeback yet again. So we'll have to keep an eye out on that one. The other stock that we'll be tracking today is SRF. Remember, it comes out with its set of numbers, and that's normally something that we look forward to, as well as the analyst commentary, the call commentary. So we'll have to keep an eye out on that one. But for the time being, at least, Aarti Industries is one stock that's recovered a goodish bit from the low point of the day. But let's invite another management, Canara Bank. They reported actually a bit of a subdued set of numbers at a time when the industry growth is very, very strong. The corporate loan growth, well, it continues to remain strong, but declines on a sequential basis. The positive, though, was the asset quality, as the gross NPAs came at its lowest levels we've seen in the last 30 quarters. Well, to discuss this and more, we're joined by Mr. Satyanarayan Raju, the Executive Director at the bank. Hi, sir. Good morning. Thanks so much for joining in. Well, I guess the street wanted a bit more growth from you, but I'm looking at your guidance numbers, and for the next year, you're guiding in low teens with some margin expansion, you know, close to around 3.05% on the NIMs. Now, the gold part of your portfolio will have to play a role, right? That's grown by close to around 30%. What kind of a growth are you factoring in on the gold loan portfolio, if you could tell us that? And also, what is the average yield you're getting currently on that portfolio?
Yes, sir. Actually, the credit growth, whatever we are given at even the last year, just let me explain here that the last year, whatever that we are given the guidance, it's an 8% to guidance, as against that we have shown 16%. But this year we have projected that we are given a guidance of minimum 10.5%. These are all the minimum numbers, but we are sure that we grow much above than that. Last time in interaction, I committed to you that our growth will be around 12 to 14%. And the same thing, definitely we are confident that we can achieve that our credit growth a minimum of 12 to 14%. But when you are giving to that, these are all the, you look at that our goals and actuals, so whatever we have given it there, except the CASA, we have performed exceedingly well in that. When it comes for the gold loan, as last year, it's not that for last 3 years, we are consistently growing in the gold loan. On an average, we are getting, if you add that the income, fee income and all, the average yield will be around 9.10. So that's a good income when our average yield is only a 7.45%. So that's where actually now, because in India, gold loan requirement is there, but that's the first option for the people is the Canara Bank. We could establish ourselves in the where there is a gold loan portfolio is very strong, especially in the south. Now we are entering into that west and even the north, there is a good traction in that. These are all because all over India we have focused this.
Yes.
That is helping us in that growing such a high percentage. Early South India used to contribute, now across the country is contributing.
Got it, sir. You know, so the gist that we're getting away is on the loan growth, the credit growth, you're being given a conservative guidance and you're confident maybe you can go ahead and achieve that. Now, your gold book, I'm looking at it in the last 2 years, it's moved from around 80,000, odd to around 1.23. So that's been 2-3 lakh, which is a very, very good growth. Could you break up the book for us? How much of it is agri? How much of it is retail? I think there's a difference of around 100 basis points on the yields out there. So tell us more.
No, actually, these are all the, our 59% of the total branch network is in rural and semi-urban. We get more traction in the gold loan only from these areas. So it's a dominant factor, especially in the Telugu states, Tamil states, Malayalam states, Karnataka, and to some extent is the West and all. There, there is a high potential for this, the gold loan portfolio. So since majority of this, the purpose of is that we have a retail gold loan credit of around 6 to 8,000 crores.